Hi, good evening, everyone. Welcome to our FM70 webinar series. This FM70 webinar series is brought to you by Bufa Malaysia, and it is in collaboration with our company, Excellent. I'm your moderator. My name is Ting Ting. Our speaker today is Trent Chok. And fundamental FM70. Now, before we start, I would like to do a quick sound check. Now, if you can't, nothing much that I can do for you. So technically, follow the screen to check the nurse. The last one is either you change your device to other device. Make sure you can hear us. And if not, you need to do something. Screen. So I give you 10 seconds for those who can't hear us, make sure that you can hear us. So for those who can hear us, now, to make the whole session can flow smoothly, please video. Please turn on your video right now, especially many states they are under MCO. I believe nowadays, right, your internet is very slow. Please make sure you turn on your video. Okay, now proceed. Now, for those who joined us for the previous session, the 10 webinar series for the FM70 webinar series. Before Chinese New Year, we already session to 7th session. Our topic is how to combine fundamental analysis and technical analysis in FM70. Subsequently, we still have 8 and 10 sessions. The next session will be a nice on Fibonacci and moving average trading strategies for FM70. So for those who like to register for the upcoming session, on your right hand side, there's a flow that you can scan and register accordingly. Else, you just follow our email. We will make sure. Now, for those who just joined us, previously you just joined us, this is our FM70 training simulation. For you, make sure at least you know that you sit out in a simulation environment. How do you trade FM70 before you proceed to put in your actual money? So, for example, like previously we always mentioned, as a pilot, right, you also need to go for simulation. So before you trade in the actual market, please go for trading simulation. So our next session will be on 27th of February. For those who know yet, join. You can scan the QR code. If you can't join, the last session will be on 20th of March. There will be the last session. So go and join and really go and simulate it. Test it yourself. How do you actually trade? How do you calculate profit and loss? How do you calculate your margin before you put in your actual money? So the session will be this Saturday. If you couldn't join, you can join for the next round. The last one will be on 20th of March. Now, I will, without further ado, I will pass it over to Trent, the moderator. Then you can see that, let me pass it over to our moderator. I'm setting up. Please allow me to introduce your speaker for today. Host a bachelor's degree in commerce from the University of Sydney. He offers regular personal coaching session on futures trading and platform usage to new investors. He's also a holder of CMSRL issued by Security Commission. Technically, he's a license holder. So please let's welcome our speaker, Trent Chok. I'll pass it over to you. Trent, you need to unmute your mic.
Okay, thanks, Ting Ting. So everyone can hear me clearly, and is my video clear? If all is clear, just type in the chat box. Yes, okay, clear, right? Okay, good. So I'm good to go. So good evening to everyone. I hope you all have your your dinner and also are sitting at a one comfortable place where you can hear this webinar. I mean, learn something from this webinar. So basically, all of you are here to know how to combine fundamental and technical analysis to start trading FM70, right? Okay, as you all previously know, FM70 was reintroduced end of last year. I guess some of you might still not familiar with this FM70. So this is my opportunity to do a sharing to all of you, okay, to learn a bit and so to get you started on trading FM70. So without further ado, let's proceed to my presentation. Okay, so before I start off, just a disclaimer here. Whatever I present today will be solely for education purpose only. It doesn't constitute a buy or sell recommendation. So these are all my personal opinion, and Phillip Futures will not be liable for any losses incurred. Because all sorts of investment are subjected to investment risk. Okay, just before I start, let me do a bit of introduction on Phillip Futures. So what do Phillip Futures do? Okay, so basically we're actually a derivative broker focusing on derivatives and CFDs. So we're actually a wholly subsidiary owned company of Phillip Capital Holdings, Selam Berhad, and we are incorporated in 1995. So we have quite some experience in the futures market in Malaysia, about 20 years now. Okay, then we also are a trading participant of the Bursa Malaysia Derivatives Berhad, and also a clearing participant. So basically, it allows us to execute your trade and also clear off all those futures contracts. And also, we are the holder of Capital Market Service License by the Securities Commission. So actually, we are fully regularized by the Securities Commission as well. Okay, this is one of our achievements last year at the Bursa Excellence Awards. So basically, we won 3 awards here: the Best Institutional Derivatives Trading Participant, and also the Best Overall Derivatives Trading Participant, and Best Retail Derivatives Trading. So we would like to, if any of you are a client, or we would like to thank you for your support for making us achieving new heights. Okay, these are some of the exchanges that we cover. So basically, we cover most of the major exchanges around the world. So we have Bursa Malaysia, Singapore Exchange, Hong Kong, Tokyo, CME, and also other exchanges around the world. So if you are interested to trade Bursa Malaysia product, we are one of the top brokers as well in Bursa Malaysia. So you can actually contact our representative, and also our representative will get back to you and guide you on how to proceed from there. Okay, so what kind of product and services that we offer? So we have 24 hours broking and execution support. So basically, if you are trading the foreign market, which is nighttime as well, so we actually provide support to you. Don't worry if you're worried that night market or no support there. We are always available 24/7. Then we also provide the latest market news. So basically, we will send to your email what our recommendation for the day, and also what our whatever market news we'll send through Telegram as well. And also we offer a wide range of products, basically covering local and foreign futures, as denoted by the slide earlier, which is we cover a lot of exchanges. Okay, next, our company Phillip Futures actually focus on providing education to clients as well. So we provide free service, which is a free one-to-one coaching session, free seminar and webinars, and free account opening. So if you are interested to join our coaching session or seminar and webinar, just head on to our website. There's a form there we can fill up. Then you just fill up, then our representative will get back to you soon. Okay, lastly, then you can connect to us via various social media platforms. So basically, we are on Facebook, LinkedIn, YouTube, and also on Telegram. So all you have to do is just search Phillip Futures Selam Berhad or search Phillip Futures at Telegram. So, okay, this is our address. So this also is on our website. So if you want to contact us, just go to our website or go to our Facebook page, and also call the numbers if for the branch that is in your state lah. Okay, without further ado, let's jump into our topic for today. So this is the outline for today. We'll be covering 4 subtopics. Basically, the first section will be on what is the relationship between FM70 and KLCI. So just to give you a bit of introduction into how FM70 is connected to KLCI. Then we move on to how to use fundamental analysis to evaluate the big picture. Basically, how to use fundamental analysis effectively to give you what is the trend of the market, what is the market heading in the current economic condition. Then we will use technical analysis to time your entry. Okay, you might maybe you have a view, long-term view on the FM70 direction, but you don't know when is the right time to enter. So how we can do that? We use technical analysis, which I'll present to you in a short time. Then lastly, we will combine these two, fundamental analysis and technical analysis, to build your trading system. Okay, I'll show you later how we are going to do it. Okay, so let's get on to our first subtopic for today, the relationship between FM70 and FVM KLCI. Okay, so let me just check with you, how many of you are here trading stocks? If you are trading stocks, right, then you may be familiar with some of these names here that are presented on the screen here. So we have the KLCI index, the mid-70 index, and also the FTSE top 100 index. So basically, this KLCI top 30 stocks plus the mid-70 stock, it forms the top 100 index. Okay, and also we have the Bursa Malaysia Small Cap Index, which is a company more than 200 million to 1 billion. There's the small cap index, and if combine all these three index, we will form the Bursa Malaysia Small. Okay, so basically KLCI is the grandfather and grandmother of the Bursa Malaysia market. They are the largest. Then we have your father mother here, mid-70 here. Okay, so in a way that this mid-70 will always have to listen to the KLCI index lah. It moves in tandem lah, in a way. Okay, then I would like to bring you to another, this is a bit of statistics here lah. How is mid-70s correlated to KLCI? So as you can see on the screen here, on the first, on the one that I've pointed to, if you look at my, if you look at my mouse, I point to a number 0.768. Okay, what this 0.768 tells us between KLCI and FM70 index is a correlation. So correlation, it means that is a 76.8% actually. It's 0.768 like in decimal number. So it's at 76.8% of the time, mid-70 index will move in tandem with KLCI. Okay, so let's say today KLCI go up. There's a 76.8% chance that mid-70 index will also go up. Okay, so this is what it means by correlation. Okay, then the next thing is how the KMCI volatility compare to mid-70 index. So you go now you refer to the arrow, my mouse again, the last column, volatility percentage. So there's a comparison here, 1 year, 3 year, and 5 year. So if you are trading KLCI index, you will experience an average of annual volatility of about 10 to 19%. Whereas the mid-70 is a bit more volatile as compared to KLCI. It ranges between 16 to 25% in a 5-year period. So in a way, this volatility actually gives you an advantage or also a disadvantage. So the advantage will be if you catch the market trend correctly, you give you extra profit. And vice versa, if you didn't manage to get direction wrong, you get the direction wrong, then it will give you greater loss as well. So in a way, it's a double-edged sword where you can actually earn more by trading mid-70 index as compared to KLCI. And of course, you need to have a good trading system, a profitable one, in order to capture the profit from the market, right? Okay, so we do a visual comparison. I have put two of the index in a chart here. So you can see the light blue one is the FM70, and the orange one is the KLCI index. So if you see here, over the course of this year, actually FM70 is, based on the recent since early this year until current, this data is based on last Friday. So over the course of beginning of this year till last Friday, actually FM70 is at a uptrend, both also uptrend, KCI both and FM70 both are trend, but FM70 gives you a better profit compared to KLCI. You see here 19.52% compared to negative 5.37%. So if you can, so actually if you want to get started in FM70, or you want to get more profit from the market, actually FM70 is a very good opportunity for you to rate some profit from the market. Okay, so that sums up the first subtopic of this presentation. If you have any question, just type in the chat box. From time to time, I'll pause and answer the question for you. So do we have any question currently, Ting?
Currently, we do not have. You can
Okay,
proceed.
so then I'll
Maybe
proceed.
we can answer all the questions at the end of the session. It's easier
Okay,
for you.
also no problem. So then we'll proceed to the second subtopic of the presentation, which is on fundamental analysis. So the main purpose of this subtopic will be to teach you guys how to use fundamental analysis effectively to evaluate the overall direction of the market. Okay, so just a brief introduction, what's fundamental analysis to some of you who may not be familiar with, just started trading and not familiar with fundamental analysis. So basically, fundamental analysis is a process of determining a model price of futures contract using a three element, which is the microeconomic data, macroeconomic data, and also industrial financial condition. So this is a general definition only. Okay, so but today we will look at two specific elements, which is the economic factors and stock price. So for economic factors, based on my experience, there are two economic indicators, which will tell you the general direction of the stock equity index futures. In this case, it's FM70. We'll be looking at GDP and inflation. I'll explain to you why I prefer to look at these two compared to the rest of the economic indicators. And also next, then we will look at the stock price. How the future expectation of the stock price affects the future direction of the FM70 index. Okay, so for economic indicators, so among all the economic indicators, we have a GDP, inflation, interest rate, and employment rate. Can I have the audience to mute the mic, please? Because there's some noise. Okay, I continue. So we have a lot of economic indicator that if you are aware of, like GDP, inflation, interest rate, and employment rate. Okay, all these indicators actually will also influence the underlying the FM70 index. But I'll pay attention particularly to two indicators, which is just GDP and inflation. Okay, so let me give you a bit of explanation of what is GDP. So GDP stands for Gross Domestic Product. So it measures the output of all goods and services in the economy. So it's basically how much company are producing, what is the amount the company is producing, and also what is the services that have offered to the economy. So it's basically the overall income of the economy. So because the output would be in dollars, right? Dollar and cents, right? So it actually measures the overall income of the economy. So when there's GDP growth, it means that the income of the economy is increasing. This is really annoying. Can you guys just mute your mic? Because I'm hearing a lot of buzzing noise here. Sorry. Yeah, need to mute the mic, please. Okay, good. Cool. Okay, so let me continue. So just now I was saying GDP is a measure of all the income of the economy, right? Based on the output of goods and services in the economy. So when there's GDP growth, means the total income of the economy actually is growing. So how is it affecting the stock market? So you can see in the chart here, there's a 3-layer here. So when GDP growth, it indicates that corporate means all the listed company in the index in general, right? Okay, the profit is growing. So when their profit is growing, what's next is growing is their earnings per share. So this profit, actually in dollar and cents, is called earnings, EPS, earning EPS. Those of you who are trading stocks, it might be, this is one of the basic fundamental analysis that you need to know lah. What's the earning per shares of the company? So when profit of the company is growing, their earning per share is growing. Then as their earning per share is growing, the stock price will increase as well, because the market will give a higher valuation to the company. So the stock price will grow. So this is how the GDP indicate to the investor out there that the corporate profit is growing. So this is one of the indicator lah, okay? Okay, now I'll show it to you. This is based on my observation and also some market statistics. So if you can see how GDP is compared to FM70 index. So on the top here, these are the GDP value from 2011 to 2020. And down there is also the FM70 index. Okay, this is the underlying index. This is not the FM70 future. This is the underlying index. FM70 underlying index. The spot index are required. Okay, so if you can see, if you refer to the red arrow on the screen, it usually move in the same trend. So when from period of 2011 to 2014, we can see GDP is growing, and also the price of the company is growing, and peak at 2014, then it went down a bit. So is the FM70 index went down a bit. Then the bottom is at near 2015 there, almost end of 2015. You also see the FM70 towards end of 2015, the FM70 bottom as well. Then beginning of 2016, there's a pickup in the economy again. The GDP start to grow again, and we also see FM70 grow again. So based on these two based on this comparison, right, it shows that GDP actually is a quite an accurate indicator, in my opinion, to indicate what is the general direction of the FM70 market. Of course, this is more to a long term, maybe maybe about if you are holding for trading period, holding or trading period of 1 month and above lah. Okay, so this actually gives you a sense of where the overall direction or the overall trend of the FM70 index. Okay, next will be inflation. So now I cover GDP. Next will be inflation. So what is inflation actually? So this word inflation actually you can see on the news most of the time lah. Whether our inflation is increasing or decreasing, and you'll start to worry, oh my God, how's inflation increase? What's the price of the gardenia bread now? Right. So actually inflation tracks the rise of the price of goods and services. So in a way that why this price of goods and services will rise, because there actually is demand. So inflation actually is tracking the demand of the consumer, because it tracks the the price of the goods and services, right? So it's actually tracking whether there's enough demand to increase the price. So in a way, indirectly, it's usually tracking the demand. So how inflation affects the stock market? So inflation actually companies, right, they actually can react to inflation by raising their product price. So let's say when inflation increasing, right, so their input price, maybe their raw material prices, they also will also increase. So as a result, right, their cost will increase. And when the cost increase, then consumer will get the negative effect of it, which is they have to pay more for the product produced by the company. Okay, so companies usually react to inflation by raising their price. This is how economic theory works. Then as their price increase, right, meaning their top line, which is their revenue, increase as well. So it will increase by the rate of the inflation. Then when their revenue rises, their earning will rise as well. So in an economic condition with high inflation, then usually what we call that, company will report higher earnings, quite inflated earnings and revenues lah. And when inflation declines, when inflation drop back and their revenue reduces, then this company will also record lower earnings and revenue as well. So in a way, based on economic theory, inflation actually moves in tandem with the stock prices lah. Okay, now we do a comparison on inflation and FM70. So you can see on the chart here, I've circled a few section. A few period where inflation actually affects the affects the FM70 index. Okay, so one thing to take note, right? Based on Bank Negara policy, they say that a healthy inflation is around 2%. Also same with the Fed, around 2%. Okay, so this is considered stable inflation rate. So when there's a stable inflation rate, as in the period, see in the chart here is 2011 to 2014, right? Quite around, this fluctuating around 2%. So there's not much effect on the market, because when everything is stable, right, then the market will just grow as normal. So you can see a good growth rate between 2011 and 2014. Okay, then things will get ugly when inflation go to 0%. Okay, what it means by inflation going to 0%, meaning that there's a that means that consumer is not actually spending as much in the economy as previously, meaning the price of goods and services stop to increase. That is the time when companies start to worry, and also investors start to worry. Basically, it's saying the economy is not doing well when inflation go to 0%. So when, as you can see on the first circle, the most left circle, when inflation moves to 0%, we can see quite a huge plunge in the market. Okay, that's when investors start to worry. So for our audience out there, if you are trading based on fundamental analysis, so you have to look closely at inflation, where is the current inflation range at? Is it at above 2% or below 2% or close to 0%? When it's close to 0%, it's time for you to short the market, because all investors out there is worrying whether the economy will continue to drop or even go to a deflation economic condition, which is quite risky to the economy. Okay, then we look at the second circle, which is suddenly inflation surge up to 4%. 4% is like 2 times 2%, you know. 2 times 2 is 4, right? So it's 2 times the previous stable inflation of 2%. So when inflation go up that high, as I mentioned earlier, company product price will move according, will be repriced according to the inflation rate, right? So you can see a period where FM70 peak at when inflation hits above 4%, which is in 2018. That's a time when inflation is high, and also the stock market is also increasing as well. Peak lah. Okay. Then when the next event is on the third circle, where inflation dropped back to below 0% in 2019. That's when the market, the economy gets ugly again, and the market also start to drop. So from this case study, we can see that inflation actually affects the stock market, but we need, but in a sense that it has to be at extreme level. Meaning to say it goes very high or it goes below 0%, then it will cause a direction, upward direction or downward direction to the market. Okay. Then next fundamental analysis will be on the stock price. Okay. Why we want to look at stock price, right? Because this FM70 index, right, is actually derive its index based on the stock price. So if we don't look at the stock price, we will never know where is the FM70 index heading. Okay. So basically, we want to the analysis of fundamental analysis of stock price is saying that since liquidity index are based on the price of the underlying companies, a fundamental trader will attempt to determine how a company's current stock price will be affected by its future outlook. Okay. So basically, if the future outlook of the all the FM70 company is good, we can say that in the future, the FM70 index will appreciate, means the FM70 index will go up. Because stock price go up, the index definitely will go up, right? It makes sense, right? Okay. So let's see what is the current analyst recommendation, meaning to say what is the future outlook by all the analysts in the investment industry on the top 10 companies FM70. So we want to look at top 10 because these are the largest company that in sort of way it moves the FM70 index. So by this top 10 company is already 32% of the FM70 index, the percentage lah. So 32% is like 1/3. So this top 10 company controls the general direction of the FM70 for that particular day. If this 10 company moves, each of them moves, stock price move up, you can safely enter a long position based on your risk and reward, and also trade the FM70 index. Okay. So if you want to know how I get this analyst recommendation here on the right hand last three column here, and then remember buy, hold, and sell, actually you can go to Bursa Marketplace. Then you type in the company name. Let's say for example, Mr. DIY. You type Mr. DIY at Bursa Marketplace there. Then you go to a section called the analyst recommendation. Inside there, they will provide analyst recommendation from various research house. And from there, you can see what is the overall analyst recommendation. Okay. So basically, analyst recommendation, there's three types, which is buy, hold, and sell. Buy means that the analysts expect the price will go up in the one year period. Also, one thing to take note, right? These analysts, they do research based on 1 year period. So based on 1 year period, if there's a buy call, meaning to say in a 1 year period, Mr. DIY shop will go up. And hold means the price will move within 5% range. That's what I mean by hold. If you sell, that means within 1 year, the price will drop more than 5%. This is how the analysis recommendation provide their what we call that, their recommendation, their buy, hold, and sell call. So from the data that are compiled from Bursa Marketplace, for this top 10 company, which is the top companies in FM70, you can see there are 86 buy recommendation, whereas the whole recommendation are 48, and sell recommendation, there's only 15. Okay, so it, in a sense, it gives you where's the general direction of the FM70 index will going, right? There's more buy than hold. So more buy than hold and sell combined. So we should be looking at long. If you are doing a slightly mid to long term trade, you should be looking at a long position. Okay, so basically that's the fundamental analysis lah. That's the three main component, which is the GDP, inflation, and also the general direction of the top company in FM70. Okay, before I continue to technical analysis, I would like to clear off some question, because I see some question on the chat box.
You want me to read it out for you? You want to clear first before?
Yeah.
Now, the question is how accurate, or what is the standard deviation in the analyst recommendation? Just now, I think it's your previous slides, based on your previous slides.
How accurate? Can you repeat? How accurate is the analyst recommendation? Okay, so this analyst recommendation, it depends on how you do it, because their recommendation is supported by facts and figures. So how they produce this recommendation will be based on their financial model. So there's a lot of assumption in it. So it's up to you whether you believe their assumption is correct or wrong. Okay. If let's say they are using one economic, maybe they put a discount rate of 5% based on cash flow. Okay. If you believe this 5% is accurate, then you can safely believe this analysis is correct. So you, as an investor, you don't solely just refer to the buy and sell call. You have to read throughout the what we call that, the whole research report, understand it. Why is it a buy call? Then you can make your judgment from there. Okay.
The next question is how to identify the top 10 companies in FM70 on each day.
Oh, okay. So this is slightly difficult because there's no like any information, any investment portal that provides you the market cap of the FM70. They are more focused on KLCI. So you this one also is a bit troublesome for me because I have to gather the data manually one by one for this top 10. So so one way to do it is you go to any research portal, or from your what we call that, your stockbroker portal, the platform. you just look at the market cap for the particular day, then you just write down, then you just write for this 10 company, sum them up, then you will get the market cap for the top top 10 company. FM70.
The last question for this particular slides is, sorry, why only 10 companies? Meaning that because you selected 10 out of the 70, so I believe it's because of your percentage. So he's asking why only you select 10 companies.
Yep. Actually, there's more company to it, but why I select 10 is because this 10 company already covers 30%. Other company, you see, the top, let's say the top 5 company, which is 24, 14, 14, 12, and from after the number 6 one will be 10, 10, 9, 9, 8. So you can imagine from bottom there, how much weightage you can expect now. The lowest 10 is already 2%. If 11, 12, I think it's less than 1%, and so on. So the lower the weightage, it doesn't pull their weight on the index. So we should be not wasting our time. Just look at the top 10 because it already covered 32%. It is already 1/3 of the FM70 index. It's good. It's already very quite an almost an accurate indicator for the direction of the FM70 index.
Okay, you want to take the last question? It just came in before you continue with your TA, or you want to take it at the end of the session?
I think I'll take it at the end of the session. So
okay.
So I'll just continue with my technical analysis. Okay, so the next part will be timing your entry using technical analysis. So the previous part, we use fundamental analysis to look at the general direction, whether it's an overall long overall uptrend or lower downtrend on the FM70 index based on the fundamental analysis. Now we are looking at technical analysis. So these technical analysis are usually used to time your entry. Okay, so give you a good timing when you should enter. So make sure you buy low and sell high, like basically when to buy low and sell high. Okay, so just a brief definition of the technical analysis. Actually, it's a statistical analysis of the market activity such as price and volume to evaluate the underlying security. Okay, so basically, analysts will use charts and identify patterns to make their investment decision. Okay, so in this technical analysis part, I will cover four items, which is how to identify the trend based on technical analysis, the overall trend, and also determining the entry points and where to locate your stop loss and take profit point, and lastly is how to calculate the risk and reward ratio. Okay, this will sum up the these are the four main essential elements of the technical analysis. Okay, the first part, trend. A trend is really a general direction of where the security and market is headed. So just by looking at the chart, you need to identify a few things. So in an uptrend, you need to identify the higher highs and higher lows. And in a downtrend, you need to identify the lower lows and lower highs. Okay, so we have a chart here, which is the FM70 index. Okay, so I will draw a line here to ease your visual, to help you to look at it easy. Where's the high? Where's the lower high and lower low? Okay, you can see the trend line here. There's lower low and lower high. So during this period from 218 to 219, it's actually a downtrend in the FM70 index. Then this is a more recent period. So you can see there's higher high and higher low. It's quite clear. It's a quite clear cut. If you zoom out the chart, put it on a weekly or daily time frame, you can see it's easier for you to identify the overall direction of the FM70 index. So you can just draw a trend line there. So you can see there's higher high and higher low. Generally the price moves in an upward manner. Okay, then this is the tricky part of trend. There are times when the price just doesn't move higher or doesn't move lower. We call it this horizontal trend or sideways. So you can see in the market there are times when the market moves in sideways. So I already highlighted in the black box in the screen, as you can see. Okay, these are the times when market moves in sideways. So during this period, it's harder for you to make money, or you need to employ a side trading strategy, which is to buy low and sell high at the range. We call it range trading. Okay. Okay. After you identify the overall trend of the market. Next thing is how to make profit from the market, which is we will determine the entry point. So I have one basic rule for entry point. Basically, is to buy low or sell high, buy low and sell high for long position, or sell high and buy low for short position. Then where you should buy and where you should sell should be buy at support and sell at resistance. Okay, so to determine entry point, you need a knowledge on how to identify the support and resistance. Okay, so what is support and resistance? So support level is a place where price cannot fall further because demand is very strong there. Okay, after this, I'll show you how to identify support levels from the chart. And for resistance is where a price cannot go higher. Okay, because there is a lot of selling pressure there. Okay, so this is how you can do this is how you draw support and resistance line. Okay, just if you see to the more recent period here, you just look at my mouse here to the more recent period, you can see currently FM70 is actually at this is based on last Friday. I'm not sure how it will develop in the today. Okay, so for as of last Friday, the FM70 index is already at what we call that resistance, because price couldn't move higher from here. And so previously, you look to the left, there's actually another level which is 15427.6 level to the left here. You can see here, there's a lot of the price couldn't go higher every time it hits 15,500 level okay, 15,500 level. So we can safely identify this is the resistance level for the FM70. Okay. So basically, you have to look look at where price will stop moving going higher for resistance. Okay. And as for support, you have to look where price cannot go lower. 2 or 3 times just bounce at the same level. You can draw a line, then you put in circle like how I do it. Then you see whether how accurate is your resistance level. And one thing to note, right, this support and resistance level is based on market perception. Meaning to say that sometimes you might not draw you cannot always get an accurate support resistance. You always, everyone will have different opinion on the market. So the best way to draw support resistance line will be line of best fit. Line of best fit meaning to say the line that you think best fit all the resistance and support in the market. Okay, and use it. And based on that, you use it as a indicator or a guideline to help you to place your entry. Okay, so as support resistance, even though we know the support resistance, but how we know whether price will bounce off this support resistance? So the next part, I'll show you that there are a few useful entry patterns at support resistance where you can use to confirm an entry at the support resistance. So the first one will be on double bottom. So what is a double bottom or a double top? So double bottom, basically when price hit support, it will go down to the support, then it will bounce off one time. That's the first bounce off, the first bottom. Then it will eventually come back to the support again and bounce off the second time. Okay, as you can see on this small blue box here. So we call it a double bottom. So the double top will be the inverted of it. It will bounce off 2 times at the resistance level before it drops for you to enter a sell position if it's double top. Okay, it's quite clear cut from the image here. Okay, then the next one is head and shoulder. So head and shoulder basically is what we call it. This pattern is also to identify entry at the support and resistance level. So at the so this is for the example here is for resistance level. So at resistance, the price will bounce one time off the resistance level and bounce second time to form a head and third time to form a shoulder. Okay, so basically you want to see the head is higher than both of the shoulder. That's how it works for head and shoulder pattern. And you can enter at the third shoulder. Once the third shoulder form, you can enter for a short position for head and shoulder pattern. Okay. So another method to enter the market will be through a trendline break at the support level. So what you can do is you identify where is the support and you draw a trend line. Once the price break the trend line, you can enter into a long position. We call it a trend line break. So trend line, you have to join all the higher highs or higher lows. Depends like whether it's a up trend line or down trend line. So if for this case, a down trend line, you connect all the higher highs and look for a price break. Okay, then this one, putting all together, all the one that I taught you, which is the two pattern, which is double top, double bottom, head and shoulder, and trend line break. I already identified a more recent occurrence in FM70. This is based on early 2021. There's actually a head and shoulder pattern on the FM70. I'm not sure if you guys have traded the FM70, you might notice this as well. So I identified the support at 14470. Then I noticed that the price bounce off the support level, which I mentioned earlier, and form a head and shoulder. Okay, then couple with a trend line break here. So you can safely put an entry here at around 14800 to enter into a long position. So this is how you use all the three pattern together to form your entry point. Okay, next will be the stop loss and take profit. So for stop loss and take profit, the basic rule is basically when the price break below your support or break above your resistance, you just chop off your position. Stop loss, go for stop loss. And take profit is just the inverted. You take profit at resistance and take profit at support. So it might sound a bit confusing here, but I'll put it in chart for you to see. Okay, so using back the same example that I used earlier. So identify the resistance level and the support level. Okay, so when price bounce off the support level and also after that we wait for confirmation entry pattern, which is the trend line break and also the head and shoulder that I mentioned to you previously, then we will enter an entry at the trend line break. So where is your stop loss will be at this support here, this support line 14470. Any price below the support line depends on your risk appetite. You can put a few points below the 14470 level. Okay, and your take profit level will be at the resistance level 14540, which is your identified resistance level earlier. Okay, I've drawn circles here to show you why I believe this is the line of best fit for support and resistance based on these two bounce off that price cannot go higher. Okay, this is one example trade where you can use for FM70. And also how to identify your stop loss and take profit. Okay, another thing that investor need to know that even though you have identified an entry point and also identify the stop loss and take profit level, but the problem is whether this trade will give me profitable profit. You need to say that is the risk and reward good. Okay, so for more to some of you that already do trading, you surely you may heard of the 2-to-1 risk reward ratio. Okay, so basically, right, to be profitable consistently in the long term, you need to have 2 portion of reward to 1 portion of risk. Okay, so you can see on the table here, if you have 2 portion of reward to 1 portion of risk, means your reward is 2 times your risk. Okay, let's say your risk maybe 50 points, but your reward is 100 points. That's 2 times. So if you want to be consistently profit in the long term, you just have to win 33% of the time. Okay, that's 1/3. Meaning to say out of 10 trade, you need to only win 3.3 trade, meaning 4 trade lah. Out of 10 trade, you need to win at least 4 trade to be profitable in the long term. So this is what I call the risk and reward ratio lah. The significance of using the risk and reward ratio. And if you are even better trader, you manage to identify a better setup. Maybe your risk and reward is 3 to 1 time. You only need to win a quarter of the time, which is 25% a quarter of the time. Out of 10 trade, you need to win like 3 trade. I mean, out of 10 trade, if you can win 3 trade, actually you actually consider quite a good trade, quite a good trader if you manage to get risk or reward of at least 3 to 1. Okay, if your risk reward is just 1 to 1, means 1 portion of risk and 1 portion of reward, you need to win at least 50% of the time. For beginner trader to win at least 50% of the time, I mean, it's possible. Okay, and as your reward compared to risk ratio getting lower, means 1 reward to 2 risk, you need to win at least 67%, which is 2/3 of the time. Out of 10 trade, you need to win at least 6 trade. Okay, it's quite challenging if your risk and reward lower. So the key here is to get a higher risk and risk reward ratio. Always go for risk and reward, reward and risk ratio that's more than 2 to 1 times. Okay, this is my advice to our audience out there. Okay, so just to show you how the risk and reward is calculated, you can use TradingView and calculate the risk and reward. It's quite convenient there. But the general idea is to identify where's your entry point, so take profit point and where's stop point. So you take this entry point minus off the stop loss point, and you get 430 points. Then you take off your take profit minus your entry point, you get 550 points. So 550 points divided by 430 points will be 1.28. So based on the entry setup that I showed you earlier, one example, usually not a very good trade because it's less than 2 to 1. So it's up to your skill on how to identify where is the entry that could give you a good risk and reward of 2 to 1 time. Okay, so I've already shown to you how to use fundamental analysis and technical analysis, all the basic concepts of fundamental and technical analysis to help you in start trading. Now I'm going to put all of them together, join them together within your trading system. So one way to do that is not quite hard. Basically, you need to have a trading checklist. Okay. For the fundamental analysis and all the technical analysis method that I teach you, it's up to you how you want to modify it. Maybe you don't want to use GTP. You can use other economic indicator as well. Which one suits you, you can just replace the list. Okay. So for this trading checklist, based on the method that I shared with you earlier, you can create this checklist. So basically, you want to know whether the fundamental analysis, the economic indicator is pointing to a long position or short position. So for example, if GDP up, it's a long position, so you take it. Of course, you have to see whether the GDP data is going up or not. Okay, you can research on the internet and see whether GDP is going up for at least few quarters. Then you can safely say it's up. Then you can safely take for a long position. Then inflation, is inflation up? Then you just take. Okay, then the next part is look at the stock price. I mentioned to you, look at the future expectation of the price. So what is the stock buy rating? We are looking buy rating for long position. If you have more short rating, then just take short position here. Okay, so it depends whether it's more buy rating or short 10 short rating for the top 10 stocks, which covers 30% of the FM70 index. Then we go to the technical part. Technical part is more straightforward. So you have to identify the overall trend on the larger time frame, whether they are higher highs. So if you see higher highs, okay, so it's long position. Okay, so after you identify all this, right, based on your tick, if all these four items here line up together on the long position, you can safely enter into a trade. You can safely confirm that the market is going for a long position. So next is to identify your trade setup. Trade setup means to say where is your entry point, where's the profit and stop loss. Okay. So the next thing you have to look for pattern, the entry pattern, whether it's the double top, head and shoulder, and trend line break. If you identify any one of these, you just circle it. Okay, just circle it. Then the pattern appeared. Okay, then next will be the entry price. So based on the pattern, where should I enter? Then what is my take profit point? That means where is the resistance for long position? Where is the resistance? Then for a short position, where is the support for take profit? For the stop loss is the inverted of it. So for a long position, where is the support for me to cut loss? For a long position, where is my support to cut loss? For a short position, where is my resistance to cut loss. Then the last part, the most important part, your risk and reward, whether you will be profitable in the long term. So make sure it's more than 2 times, okay, 2 to 1. So after all of this, then you can enter the trade safely. That's how you can get started in trading FM70. And of course, this trading checklist, you can modify it time to time. You can put in additional item, you can change my item. Basically, this is based on my experience, based on my observation in the market. Okay. So if you feel you have a better, what we call that, better indicator or better pattern that you feel is more effective in trading the market, feel free to share to me. We can study together. Okay, so that sums up for what I have to share to you today. Okay, so basically we've covered a few things. What's the relationship between FM70 and KLCI index? Then what is the how to use fundamentals to evaluate the picture? So basically, from my opinion, GDP and inflation are the two most effective indicator. Then we look at the future expectation of stock price. Then the next one will be timing your entry using technical analysis. So you need to identify the trend using a higher time frame. What's the general trend? Then later you need to determine your entry point based on the pattern. Then where you should locate your stop loss and take profit based on support and resistance level. And lastly is to calculate your risk and reward ratio. Make sure it's more than 2 to 1. And lastly, create your own checklist, trading checklist. You will get started. So basically that's all. And what should you do next? Basically, if you are interested to start trading FM70, you can, we have our futures offers online account opening. So you can open account online from the comfort of your own home. You don't have to come into office, especially during this MCO time where you want to reduce the risk of infection. Okay, all you have to do is just scan the barcode here and it will direct you to our website for online computing. Okay, on the first page there will be instruction for you to how to guide you on how to open account. Okay. Then we also have this event organized by Bursa Malaysia, this competition, Trade FM70 and Win Trading Competition. So there are up to 30,000 worth of prize for trading FM70 contract. The period is from 14 December 2020 and to 12 March 2021. So if you are interested to join this competition, you first need to open an account first. Then you will start trading FM70. Then you can participate in the competition. For more information, you can go to our website or you can go to Bursa Marketplace to see more details on the competition. Okay, so I will share to you this early, so you can contact us through various channels on social media. And this is our contact. Okay, so now it's the current session. What do you think?
Okay, thanks a lot, Trent, for your very informative Q&A session. Meantime, in the chat box, we already type in the Philip Futures. If you want to open your futures account, you can click on the link. We already type in the chat box. You can search for it. Then if you and click the link and submit your request.
Okay. So for FM70, Philip Future actually offer 5 ringgit commission for in 5 ringgit, out 5 ringgit. So round trip will be 10 ringgit lah. So this is actually a long-term promotion of FM70. Okay. It's actually the rate actually is on our website. You can Google it on our website as well, Philip Future's website.
Okay, now we open the session. Now for those
your voice is breaking.
we're going to open the session. Those are leaving early, please prepare form. Okay or not? Technically, nothing much that I'm going to say. You all just need to look at the feedback form. Then our upcoming FM70 to participate for the next session. Now, we have a question in the chat box. I think we are going to start with some question. Type in the chat box, then we are going to start with some of the questions. Now, start with the first question, just now catching up from them. They are asking you, looking at 2020 chart for inflation, right? Just now you're showing the inflation chart. The market direction doesn't really correlate with. Is it partially due to stock market performance?
Okay, so as I mentioned to our audience earlier, inflation chart, it doesn't fully correlate. You have to look at the extreme point. If you look at, if you refer to my chart again, never mind, but we want to look at the extreme point. Basically saying, basically we want to look whether inflation is below 0% or extreme high, which is more than 4%. So at this point, when inflation moves towards the level, we will see a very, we will see peak and bottom of the market. Means market will move in extreme. So when inflation drop below 0%, okay, then market will definitely drop a lot, Then when inflation go above maybe more than 4%, then market will go up a lot, okay. And during the time where stable inflation, which is as denoted by Bank Negara, which is around 2%, then we will see market will be steady. Not to say steady, like it will be steady on an uptrend or moving slowly up, because everything is stable. So things will move in a stable manner for the stock market as well.
The next question is regarding this FM70, because right now FM70 trading volume is relatively lower. So the question is, what is the strategy to trade? Do you have any recommendation or not?
Okay, so for FM70, yeah, you might notice the volume is quite low, but okay, so traders have to be careful on choosing the right time to trade, meaning when you should enter the market. So usually when is the best time to enter the market is when price hit the support and resistance level. So during when price hit the support and resistance level, there's actually a lot of bid and ask order queuing at this level, because everyone wants to enter at this level. Everyone is looking at the level. The whole market participant is looking at this level. So that's the best time when you want to that's the best time where there's higher liquidity than usual for you to enter a trade. Okay, and for FM70, usually trends slightly longer compared to KLCI, and also more volatility. So if you manage to get a good entry point, actually you can make some profit off the market, because the higher volatility and also slightly longer trend compared to KLCI.
The next the based on the view,
so
whether you are going to suggest for daily or weekly.
So it depends on your trading strategy as well. If you are like a day trader meaning to say intraday trader, you usually enter through 15-minute, 5-minute time frame. Then looking at the daily chart will be better than looking at the weekly chart, because it's just too long. Okay, if you are like a trend trader, you hold for maybe 1 week to 1 month period. Looking at weekly chart definitely will help you. It should be depends on your what we call that trading holding period, your trading strategy. What type of trader are you? Short-term, long-term?
Okay, the next question, right, is asking now the question is asking, after the bottom, the price will go up, and the next question is after it to go down.
Okay, so the picture that I shown earlier, right, it's just one direction, because I only snapshot the double bottom, but I didn't show the double top exactly. But I've mentioned earlier, if the double top is actually just an inverted double bottom at the resistance. So when double bottom, it happens at the support. So you want price to bounce up to form a double bottom. At double top, you have to imagine yourself see the price bounce off from the resistance. And for the head and shoulder, there's the head and shoulder just now I shown to you is at the resistance head and shoulder. So you have to look at the shoulder head and the one head and two shoulder bounce off the resistance level. And if you want to, then you have to imagine yourself how this head and shoulder will form at the what we call that, the support level. So basically, I only show one section, one direction of it, but you have to imagine yourself and imagine. So I mean, as a trader, also you need to be creative, be imaginative in your trading, because technical analysis is an art. So if you manage to capture and improve this technical analysis skill, this art, so it will definitely help you.
How to determine best bottom and top take as measurement? The question is not very clear, but maybe you can put in your own assumption, then just answer the question. How to determine best bottom and top?
I think he's referring to the measurement for the risk and reward. So for risk and reward calculation, yes, right? When after the best bottom and top for the support resistance, basically the bottom will be the support, top will be the resistance, right? For risk and reward calculation, you have to calculate from the where you cut loss point, not exactly. You might put your cut loss point below the support level because you scare the market will fake you, right? So you put a few, maybe 10-20 points below the support or resistance level. That's where you count where you take the measurement for your risk and reward ratio from the entry point. You don't take the support resistance level, but you take the exact point where you cut loss. It may be lower or higher than the initial support resistance that you identify.
Okay, the next question is how to increase reward risk ratio to increase win percentage.
Okay, so risk and reward and risk ratio is basically your you can improve by timing your entry. So if you see the price bounce, or let's say for example the price bounce the support, it depends how early you identify the price will bounce off the support. Of course, the earlier you identify, the more risk you are taking. Maybe it's a fixed bounce off. If you wait a bit more, wait for a confirmation pattern, you might have a lower risk and reward, but it's a safe one. It's a safer trade compared to the one that initially bounce off the support level without the what we call that, the confirmation entry pattern. So in a way that you need to study the market on maybe you need to identify a better pattern than the one that I provided. But the one that I provided is actually a very safe pattern for you to enter.
So the question regarding the slides, at the end of the session, we will send you the email, so you can download via the email itself. So all the slides for today's session, right, Philip Futures will provide a copy to you all. So you really need to thanks to Trent, and he already provide a copy. Later, we will send you the link for you all to download. Now, for this series of FM70 webinar series, access to the platform. Now, the next question is a bit similar, but it's slightly different. This question for the chart, right? He's asking what's the time frame we can use.
Can you repeat the question again? What's the time frame? Ting, can you repeat the question again? Hello, Ting Ting, can you hear me?
Meaning that what is that I mentioned? Can you hear me? Can you
Oh,
hear,
okay.
hear my
I saw the question, I
voice?
think, for the yeah, because you are breaking earlier. You're breaking earlier, your voice was breaking earlier most of the time. So I saw the question by Isaac, right? So for the charts, what's the time frame we can use so that the patterns mentioned are applicable? Okay, so for this one, you can look at the time frame. Sorry, the time frame that you identify your
What
library.
is the time we can use?
Yeah. So for this one, we can actually use back the same time frame where you used to identify your trend, the overall trend, which is the up and down trend and sideways, right? You can use back the same time frame, or you can move to one smaller time frame. Let's say you are on weekly, you can move to daily to identify the pattern, or if you're on daily, you can move to 1 hour to identify the pattern. One smaller time frame will be enough. Don't go too low time frame like 15 minute, 5 minutes to identify. There's most of the time it's just noise and you won't get to see a very clear and accurate pattern.
Is other than commission, any other charges such as stamp or clip?
Okay.
Mention the for fees.
Okay, so the one that I mentioned, the 5 ringgit in, 5 ringgit out will be just commission. There's no stamp duty for futures contract. There's no stamp duty or any levy fee charges, but there's SST. SST is 6%. Okay, so basically 5 ringgit plus SST 6%. So that's the two type of charges lah for futures contract. I mean any for futures contract.
Fees. Right now for Malaysia, they are charging $1 for exchange and $1 for clearing fees, if I'm not mistaken. So meaning need to plus this $2 to 5 with the SST, then because the exchange and clearing fees is excluding the SST, just for information.
I think it's already included. 5 ringgit included the exchange and yeah, already included.
So your commission is $3. Your commission is $3, is it?
Yeah.
Okay. And the remaining exchange is $1. The fees is for those who would like to understand this. Now, the next question is for the technical analysis part. Is regarding the technical analysis. Do we use other indicators like SMA, EMA, etc.?
Okay. Like I mentioned to you during my trading checklist, feel free to add any indicator that you wish to where you feel is more effective in your trading, that it suits your trading style. You can feel free to add in. So some of the mostly used indicator would be like as you mentioned, simple moving average, exponential moving average. You can use MACD, RSI. All depends on your trading style. Depends what type of trader are you. If you are looking for trend trading, so SMA, EMA will be definitely beneficial to you. If you are looking to trade a reversal, maybe you can use overbought and also indicators such as we call that RSI, stochastic. It really depends on your trading style. But but from my sharing today, I have not put much indicator. Basically, I want investor to start learning charts through naked trading. If you master naked trading, actually you don't need those technical indicators to indicate to you. But definitely will help you in your trading. Will help you to indicate easier to you when's the entry point, when's the what's the direction of the market. But you should start off the harder part, which is doing naked trading.
Okay. The next question is, does the futures account for FM70 let us eligible to trade other futures contract also? So meaning that one futures account, technically you can trade everything. Am I correct?
Yeah, correct. Can trade both local and foreign futures.
Anything related to futures, once you open your futures trading account, you can trade FM70, you can trade FCPO, you can trade the rest as well.
Yeah. For the full product release, you can contact our representative, then we will send you the full product list. So you can have a look on what are futures that we offer, then what are futures you want to trade.
So you all can check on the chat box. So there's a link for opening your futures trading account. You can access to that. Now, the next question is, if the mid-cap 70 stocks are moving very volatile, but there is very low volume in FM70, will movement of FM70 be volatile as well?
Okay. This FM70 future is actually based on the underlying index of FM70. So if FM70 is moving volatility in a volatile manner, the spot index, then the futures will also move in move in such manner. But there might not be exactly one-to-one. Meaning, say the spot index move 10%, then FM70 might not move exactly 10%, maybe 9%, 8%, or even more than that. It depends on the market forces. Definitely, if everyone saw FM70 spot index moving volatile, everyone should want to jump in and also want to profit from the market as well. So then there surely be a movement in it.
Oh, there's a question regarding I believe the question is not complete about actually the but anyhow, for those who do not have any background, this FM70 is now, next question, analysis, does we refer to VIX index as a guideline for trend? Where to look for VIX index in Malaysian market?
You mean the VIX index in case of the VIX index? I mean, in Malaysian market, we don't have this VIX index. VIX index is only offered by US market. If you are looking for VIX indicator, you might need to refer to your platform. Maybe you go to the indicator list and see whether there's a VIX or not.
Correct.
I think most of the trading platform doesn't have a VIX indicator.
The futures exchange market just offers.
The most active future, actually, most of the major exchanges that we offer are all quite active. It just depends which product is more active than the rest. So all you have to do is just go to the exchange website, maybe Bursa Malaysia. In this case, you go to their derivatives prices and you see which contract has the most volume, then that's the most active. I mean, you have to do some research on yourself lah. But also depend whether you're unfamiliar with the underlying product before you start trading.
Now, chat box, but yeah. Let's highlight the FM70 webinar session that is available. Now, meantime, can you please take 3 minutes just to, actually it's very fast. I don't think need 3 minutes, maybe 1 minute. Please scan this QR code and please provide us with your feedback. Just 1 minute. Just type in your feedback to us, very fast, a few questions only. The link is in the chat box. If you want, you can scan the QR code or else you can click on the link to submit us your feedback. It's just about 1 minute. So we'll take 1 minute for you to finish the feedback form before we proceed with the rest of the question. Last that you notice that there's a question, if many of you read the feedback form. If you're not yet, you can fill out the feedback form. Now, the upcoming session, webinar session of March, FM70 期货短线交易策略, it will be in Mandarin, and subsequently on 17th of March will be a topic about Fibonacci and moving average trading strategies for FM70. On the 5th of March, FMC constituent sectors, they are going to analyze in terms of the constructions and sectors. So if you would like to join the upcoming session, you can, this is the QR code, scan and can register accordingly. We limit to 300 online attendees, first come, first serve. Now this is the, once you click on it, you need to click on March for all the March session. You can see the calendar. This is the March session. Then you need to click on the March session, remember, for all the FM70, because right now we are still in February. Now, the final one is about the trading simulation. As we mentioned to you, Bursa Malaysia Derivative also organized this trading simulation session for you to familiarize with the calculation of this FM70. How do you buy? How do you sell? How do you calculate profit and loss? So please check on the upcoming session on the 27th of February. You can scan on the same QR code and just check it out on the 27th of February. You can register accordingly. Now, this is the end of it. Now, if you never receive our email, make sure that you save our email so that you can receive all the upcoming session. Now, we are going to continue with the session. Let me go back to this. Now, the next Q&A session is related to Philip Futures platform. What platform Philips use?
Okay, so Philip Futures, we have our own in-house developed platform. We call it the Philip Nova, which you can find from other brokers as well. So this Philip Nova, actually, there's a few benefits to it. First, you can, we have live chat. Okay, some of the brokers doesn't offer live chat, but we do have live chat. And you can trade using the market depth. So trading using the market depth is actually quite beneficial for those scalper. Scalper means say you want to get in, get a few points, if you ticks out immediately. So these are some of the benefits. Then also you can monitor your profit and loss, live profit and loss from the platform as well. There is known as the Philip Nova. All you do is just go to our website, philipfutures.com.my, and can register a demo account there, a 1 week free demo.
Okay, the next question is based on whatever you covered just now regarding the setup you mentioned, what are the probabilities of success?
Okay, so for the setup that I mentioned to you, right, the probability of success actually is quite high. I don't have a current number for it, but it's quite high because the one that I show you is actually a more safer method to enter the market. It's not like you just enter near the support. You actually look for confirmation. As I mentioned, it's a confirmation pattern before you enter the trade. So it's quite safe. I would say it's quite safe. So in a way that the probability is also higher than usual.
Next question is FM70, right? Easier to trade compared to FKLI and FCPO. I think it's a very general question. For this question, is FM70 easier to trade compared to FKI and FCPO?
Okay, so basically FM70 and FKI, as I mentioned previously, it moves in the same direction most of the time, which is about 75% of the time. So if you have experience trading FKI, right, it's actually not hard for you to get started in trading FM70. So you can basically do your get a similar trading style for FKI. If you're trading FKI, you can use the same trading style for FKI and use it on FM70. It's just that the FM70 fundamental part, which is the company, the composition of the company is slightly different than FKI. FKI is more to banking and healthcare stock, whereas the FM70 is more to consumer and technology stock. So, but in general, the trading style is almost similar. So it's no problem for you to get started in FM70 if you already experienced trading FKI.
Okay, the next question for our side. It will be the last series. Subsequently, we are going to work with FKI CPO webinar series, but we are going to cover this FM70 for the last webinars for the construction. Now, the next question is, which month futures would you normally recommend to trade? I think it's a very general question. Maybe you can start with FM70.
Okay, so for FM70, it's actually in general, all index futures, stock index future, we trade this spot month. Meaning to say, you trade the current month. If let's say currently is February, you trade February. Until it expires, then you start trading March contract. But of course, during expiry, you need to be careful because everyone will be starting to roll over, especially this week, FM70 February contract, which is the current month, which is the active month. Some of them already started rolling over to the March contract. So to answer the question for index future in general, FKY or FM70, just the active month will be the current month.
It's volume 70.
Yes, volume also play a part in doing your analysis before enter a trade, but it's not as high significant compared to stock trading. So because generally futures contract volume are quite similar from day to day Only during some major event there might be slightly higher volume maybe some significant news come out on the particular day, then we higher volume. In general, you still can use volume analysis for your to improve your trading as well.
Okay, we are going to take the last two questions. How to calculate the actual risk and reward ratio?
Okay, the actual risk and reward ratio, all you have to do is just do a comparison between your entry point and your entry point and your take profit point, and your entry point and the stop loss point. So you calculate how much your entry point to take profit point, how many points are there, then you divide it by your stop loss, your entry point and stop loss. You can, I'm sure the slides will be given to the participants, right? So you can refer to the slides to see how it calculates. But alternatively, you can just use your platform to calculate. I mean, TradingView, they have this function where you can use just drag the mouse to drag the calculation on the chart to calculate for you.
Okay, our last question for today. Due to high volatility, suitable for short-term trading, does it benefit for long-term? I believe this is referring to FM70. So due to high volatility, is it more suitable for short-term trading, or does it benefit for?
This volatility, right, for an investor or a trader in general, volatility actually is good to the market. It means the prices move. You don't want the price to be stagnant, right? Stagnant meaning the price moves sideways all the time. You don't know whether you couldn't earn much from the market. So whether it's short-term trading or long-term trading, volatility is actually a friend for most investor and trader. But have to be aware of uncertainty versus volatility. Volatility means my price move a lot, good. But if uncertainty is a different thing, uncertainty, you don't know where's the general direction, you know whether it's moving up or moving down. So volatility is good, uncertainty is bad.
Okay, so this comes to the last question that we already answered. And before you all go in the chat box, remember, if you would like to open a futures trading account with Phillip Futures, you can click on the link and you can contact Phillip Futures. Based on the rate given by them just now, right, for the FM70 is considered very, very low. So if you would like to kickstart your FM70 trading, you can click on the link and open your futures trading account with Phillip Futures. So this comes to the end of the whole session. Thanks for your participation for this throughout the 1.5 hour session. And thanks a lot to Trent for the very informative presentation session. And good night, everyone. And thanks a lot.
Yeah, good night, everyone. Thank you for spending your time. Learn something. Thank you. Bye.
Bye-bye.